India needs a lot of infrastructure in power distribution, power transmission, though we have enough capacity in generation. India also needs more airports, more cargo movements or through trains, more ports, and sometimes even more roads. But infrastructure financing is in a nascent stage in India. Most of companies which have built our roads, airports, power stations have gone belly up. What is the problem? In a recent discussion with Deepak Parekh, Rajan gave his insights. But before we go into details, press the like button of this video, press the subscription button, turn on the bell notification if you want to get regular updates for all the videos I put up. Rajan, when discussing with Deepak Parekh, gave a solution. What he suggested was India relies too much on debt financing, has very little equity, and this caused the problem. First, let us understand the difference between equity and debt. Equity capital is risk capital. If your project fails, you get wiped out. Nobody gets anything. With debt, there is no question of wiping out. You get like a vulture to feed on the assets. You take the assets on auction and you try to recover it, salvage it, and recover some money because the person who gave the debt has to pay back somebody. Because institutional investors are not investing their own money, their banks are investing deposit money, insurance companies are investing their corpus and hence cannot afford to take such risks. But in India, we have been pushing debt with very little equity. And this is one of the reasons why infrastructure projects have stalled in India. But if we have to have more equity, that is not possible in India because India has very limited risk capital. Very few of our Indians invest in stocks. And even among those who can afford to invest in stocks, stocks represent less than 5% of their investments. Most of the money is either in real estate or in debt instruments. Some of them hoard money in gold. Thus, India does not have risk capital. This is a legacy of our socialist past, where every businessman is thought to be a thief, and hence nobody wants to partner with a thief. It's only in the last 25 years we have developed some sort of equity cult. But even in this equity cult, scamsters like Harshad Mehta and Ketan Parekh have put paid to any hopes of long lasting belief in equity. The average Indian investor is not willing to stomach great volatility in prices and is not willing to stay the course for many years, like I explained in my Tamil video about Shanti Gears. Equity investors are meant to stay for long term. I mean, they're very long term. And since our markets are shallow and there is not enough financing to go around, we are dependent on debt to finance our infrastructure projects. Most foreigners would also invest only in debt, like Oak Capital is swooping in to buy distressed assets. The problem in foreign currency debt is this that the company or the person who is executing the project assumes two risks. He has to pay not only the principal in US dollars, he also has to pay the interest in US dollars because the inflation rate between America and India is vastly different. That is, Americans have less than 2% interest, and we are running an 8% interest nearly. The gap of 6% will sooner or later show up in the currency, and the rupee will depreciate. As the rupee depreciates, the value of principal borrowed also goes up along with the interest payments. This has sunk many a company, which I am going to talk about. So, infrastructure companies cannot afford to borrow in dollars. At best, they can borrow in rupees. They cannot afford to take interest. The risk of currency slides. Apart from this, no project in India is completed on time. The government tenders, then goes for land acquisition. The banks have already lent the money and the interest clock is ticking while the government settles these land acquisition and other terms. In between, India's judiciary has poked its nose into these issues and decided in a way against the government, leading to further delay. If it were equity investment, the companies would have survived because there was no interest payment and required and there was no fixed deadline to finish the project. But in case of debt, while we wait for the courts and the government to settle the matter, these people had to pay interest and capital back. While they waited, the rupee would have depreciated, and for the same amount, they would have of dollars, they have to pay more in rupees, both for capital and interest payments. This simple thing that the depreciation of the rupee and delay in government execution is what killed many a company. I'm just going to name three. IVRCL Infra, a company which was doing very well, got sunk by debt because a certain government did not pay on time. Similarly, Reliance Infrastructure and Reliance Power would have survived if they had not depended so much on debt and had taken more equity. The promoter was very greedy and he thought he could pull off the whole thing with debt funds and geared his company up to nearly 1 lakh crore plus in debt and fell under the weight of it. Same thing happened with SR, which built a leverage bet on steel and oil. So companies and the Z empire slipped out of Subhash Chandra's hands because he tried to get into infrastructure with a company called SL Infrastructure and borrowed from banks. Worldwide, infrastructure companies have a lot of equity. In India, the compound debt exceeds 70%. If you are going to borrow between 70 to 80% of the money to set up an infrastructure company, then definitely it's going to sink because with that kind of debt, you cannot afford any delay. And invariably in India, every infrastructure project is delayed. The famous case of the Nandi Infrastructure Company, which put out a expressway between Bangalore and Mysore, is famous for it was mired in litigation forever. In India, governments want to interfere at the drop of the hat. But for international equity investors to invest big in infrastructure, you need strong regulators. India does not have strong regulators. India's regulators are manipulated by the government and cannot take no for an answer, and they make terrible decisions. The example of appointing Shaktikanta Das as a Reserve Bank governor is an example. Shaktikanta Das is at best doing what his masters bid. At a time when inflation is raging at 7.5%, instead of tightening the monetary policy and draining out the excess liquidity, he is maintaining the accommodative policy for the benefit of his corporate masters. In the past, IRDA had two sets of rules, one rule for private investors and another rule for LIC. Every time LIC had to do something to favor the government, IRDA would bend rules. If you have regulators like this, you cannot have world class equity money coming into India and infrastructure. Foreigners would prefer to buy matured banking or software stocks. That is why you have HDFC Bank as the most valuable bank in the world because it reads a clean book and does not depend on government regulation. Whereas, take the example of Tata Power. Tata Power borrowed heavily to set up Mundra in Gujarat to supply power. It was a mega power plant. The government refused to pay a fair rate for power because coal supply linkages was a problem. The Supreme Court declined to interfere, showing the contract law book. Finally, the Tatas had to pay through their nose and repay all the borrowings by taking equity on their parent company, that is Tata Power's books, and making Mundra a debt free company. And Mundra is still generating power. But had Mundra taken equity from day one, all these difficulties could have been avoided. All I am making is an example. There may be more to it in Mundra power plant, but this is just an example. India desperately needs more equity in infrastructure, not in banks and pharma and IT companies. Hope somebody in power listens to Dr. Rajan and takes the necessary steps. Thank you for watching. Be Rich. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. If you use Kindle, you can buy the book using the Kindle link given below. If you want a hard copy, send a message to the WhatsApp number given below and my team would get in touch with you. At the very end, if you want to get in touch with me, please send a mail to berichenglish@gmail.com. I am grateful for your support of Be Rich.